Ladies and gentlemen, good morning and welcome to our Q1 2025 Analysts and Investor Call, broadcasting today from Euronext, Brussels. The sun is shining in Brussels, we have a new Pope and we have some dynamic and promising results to share with you this morning. I'm joined this morning by Els Vervaeke, our CFO, and Ina Maslova, our Investor Relations Manager. We are pleased to share the strong performance of our portfolio, reflecting both the resilience and strategic progress. This morning we have an agenda with the Q1 highlights, a growth update, portfolio update, a market update, and we will end with an outlook both on the figures as on our ESG targets. We will then end, of course, with the Q&A session, which will be led by Ina. But I first give the floor to Els for the Q1 2025 financial highlights.
Thank you very much, Jo, and welcome to all of you. The first quarter was marked by strong market dynamics in and across our core regions. Demand for logistic real estate remained solid, driven by ongoing trends such as e-commerce growth and increasing need for sustainable supply chain solutions. With 90,000 square meters of new leases signed, excluding the joint venture with Weerts for the development of the project in Luik for Skechers, and a 99.9% stable, exceptionally high occupancy rate, the start of 2025 was a great success. In short, Q1 confirms the strength and resilience of our growth strategy, even in a persistently challenging macroeconomic environment. 2025 kicks in with an EPRA result of 25 million, an increase by 25% year on year. The EPRA EPS stands at 1.07 euro per share, an increase by 9%, despite a 14% increase in the weighted average number of shares. The net result of the first quarter stands at 37 million and includes a 9 million of positive portfolio revaluation. Total property result increased by 21% to 34 million euro for the first quarter of 2025, was mainly driven by new income from new acquisitions, newly delivered projects, as well as it was driven by like-for-like rental growth of 3.6%, which consists out of 3.3% that is linked to rent indexation and 0.3% that is linked to rent renegotiation. The operating result evolved in the same way, plus 23% to 29 million euro for the first quarter of 2025, leading to an operating result of 85.2%. The financial result increased by 33% to almost 4 million euros, and this reflects the increased interest charges due to net debt taken out. The tax line that incorporates the corporate income tax for the Netherlands amounts to 600,000 euros. All of this leads to an EPRA result of roughly 25 million, an increase year on year by 25%, and this results into a recurring EPS of 1.07 euro per share, or an increase by 9% compared to the same period last year. The fundamentals that will enable our growth are a loan-to-value of 35%, an adjusted net debt on EBITDA of 6.9 times, an interest cover of 4.5 times. The EPRA NTA stands at 78.9 euro and increased by 4% year on year. Our approach has always been prudent, with a strong balance sheet. The net debt on EBITDA has never exceeded 8 times throughout the last years, an interest cover ratio that has never been below 4.5 times, and a loan-to-value that has never exceeded 40% over the last couple of years. In 2025, we strengthened our financial profile by contracting 360 million euro of new funding. 71 million was refinancing of existing bank loans, which has resulted into no bank debt that is maturing before 2027. Furthermore, we were able to add another 290 million euro of new bank funding, which has resulted in an extended average remaining debt maturity from 5.7 years to 6.2 years. Of course, it has also strengthened our liquidity position to a level of 417 million euro of immediately available funding. The hedge ratio stands at 97%, while the expected cost of debt declined from 2.3% to 2.1%, and the 2.1% we will able to keep it at that level for both 2025 and 2026. The 20 base points decrease that we have is linked to the kicking in of forward start hedges in the first quarter of 2025. Funding is diversified. 47% is bonds, 52% are credit lines, and the funding is long-term, 6.2 years maturing financing, and maturity of the hedges is 5.8 years. And of course, always a well-spreading of the maturities for both credit lines and bonds well in time. Sorry. Back to you, Jo. Thank you very much.
Thank you very much, Els, for this update. I will give you now an update on our growth plan. And as you know, we have a very ambitious growth plan of 1.2 billion under track 27, which is basically linked to 4 drivers: our own developments, strong partnerships, acquisitions in the market, and green investments. Now, when we look at those 4 engines, those 4 drivers over the last years, you see that, of course, after a very active year, 2024, where we did over 400 million of growth, we are now at 111 million for the first quarter, of course, mainly driven by the partnership we signed with Wirtz for the Skechers deal, but also on our own development. Basically, if we look at track 27, 70% of our growth of 1.2 billion is now earmarked. There is 550 million that has already been invested. There's 90 million that is in execution, and there is more than 170 million that is now under exclusive negotiation. As I already mentioned, already 111 million of the growth program for this year has been invested in Q1. In execution, that means 79 of our projects. This is mainly the big project we are doing in Tiel for Intergamma, and of course the Skechers deal, and solar panels, 15 million. And under exclusive negotiation, we have roughly 90 million of yielding investments, another 50 million of solar panels and batteries that we are trying to get on our roofs and next to our buildings, and another 30 million of non-yielding land bank. So we keep on building that strong land bank. 20,000 square meters of those fully pre-let projects have been delivered in the first quarter. That's an extension in Aalst for Movianto, and in Amsterdam, the new development for Blond. And of course, 200,000 square meters is now under development in execution. This is the pro rata of 40% of the large Skechers development in Liège. This is a new building for Vos in Os, and it is the building Tiel North for Intergamma in Tiel. Maybe I would like to give a little bit more flavor on the Wirtz deal, because there might have been need for some more clarification. As you already knew from our previous call, there's a maximum exposure for Montea of 140 million, but every euro we invest in this project gives us an immediate return on invested capital. And in 2027, when the lease kicks in, of course, we get a return of above 6%. But we thought it was important to mention that this is already generating income as from day one. As I already mentioned, 45,000 square meters pre-let projects in Q1. Both of the projects need additional permitting, so we cannot give more detail on that, but it gives you a flavor on the activity on the letting market. Today, we have, as I already mentioned, 200,000 square meter in execution, 100% pre-let, and 17.5 years is the average lease duration on first break. And next to that, we have, of course, the land bank for which we have a permit, but not yet pre-let. And we have the two projects, Halle and Zelik, that are now pre-let, but are waiting for a permit. In total, there's still 310 million to be invested. The average yield on cost is 6.8% of those projects, and they will lead to an additional rent of 40 million. After these projects, we still have a land bank of roughly 1.9 million square meters. Here you get a nice picture of all the projects in Belgium, the projects in Holland, leading to a land bank at the end of Q1 of 2.8 million square meters, so quite flat. Total investment in that is 560 million, which is roughly 245 euros per square meter. Half of that land bank is yielding at an average yield of 5.8%. It may be important to mention also, if we look at the potential of that land bank, because we can talk about square meters, but at the end of the day, you are interested in what is this going to generate in income and in development margin. Well, basically under track 27, we are convinced that we will be able to increase the rent by 35% based on that land bank. But when we look at the potential beyond 2027, we even are able to increase the rent roll by 70% just based on the development of the land bank. And the margin this is going to create, basically, if we develop the entire land bank, we can grow the portfolio to 4.1 billion euros. And there is an additional value creation on that land bank of 250 million. Of course, next to this land bank, we will also continue to do acquisitions. We will continue to fuel the land bank, and we will continue to do green investments. But we thought it was important to give you that strong message that there is still a lot of value that is hidden in this magnificent land bank. I'd like to hand over the floor to Ina now for the portfolio update. Ina.
Thank you, Jo. Our portfolio has reached a 2.9 billion size in Q1, and this is predominantly has been driven by the investments in our development pipeline, a sizable part of which has been the Skechers project that we are now in a full execution stage in Liège. To give an overview of a bridge, the total capex invested has been 111 million, and we have seen a rather stable portfolio valuation over the course of Q1. Looking more specifically at the standing portfolio, we continue to see resilience supported by the constant yield being applied by the valuers on the valuation of our portfolio and the ERV growth being mildly positive. Important to mention as well is the reversionary potential in our portfolio. It is a core lever of the future upside potential. As you will see, it has declined from 12% to 8% in Q1. The main reason for that has been the strong catch-up mechanism we have been seeing due to the application of indexation in Q1, and that has been taken into account by the valuers in their ERV assumptions in Q4 already. This is predominantly linked to the Dutch portfolio, and we have clearly been able to secure and pass on that indexation to our tenants. Looking at the performance of our underlying portfolio, we have now successfully re-let and renegotiated about 70% of our leases. They're roughly split 50-50 between re-lettings and renegotiations. and the average rental uplift on those secured has been standing at 4%. As a result of this, we continue to maintain our sustained occupancy rate at close to 100%, which continues to outperform the market average. Looking at where the market stands today and coming back to the activity that Jo has already alluded to, we start to see incremental recovery in tenant demand. And this is something that is based across all our markets, with the exception for France, where the recovery has been rather muted to date. The trend remains below the long-term average. Having said that, it continues to be supported by the lack of new supply, and in particular to the speculative supply. As a result of this, we expect that the market vacancy rates will be stabilizing, and the focus on sustainable, well-located buildings will continue to support that. Prime yields across all the markets are stabilizing, and with the Netherlands even forecasting a potential yield compression. The asset valuation is supported by prime rents either being trailing the indexation or even posting mild positive increases that have been observed in Belgium and Germany as well. The important distinction there is that the key markets and the key locations remain strong performing, and this comes down to a very scarce supply dynamics in those markets. Looking at the chart which we have previously shown during our Q4, we believe it's important to also put in the context the fact that the Benelux and in particular French markets have actually been trailing Europe when it comes to rental growth. And in particular, the comparison is even more striking when looking at the UK and the Irish markets. What does it say? The fact that the logistics rents remain at continuously available and affordable levels when looking at the total cost of operation for the logisticians. Els, now over to you on the outlook.
Thank you very much, Ina. We reconfirm our 2025 guidance of EPS at 4.90 euro, an 8% year-on-year increase, excluding the potential 8-cent one-off from the FBI recognition for fiscal year 2024. We also reconfirm our 2027 guidance EPS, 5.60 euro, which represents an annual average growth of 6%. The growth will be done through disciplined financial allocation with a focus on operational excellence. The leverage will remain under control, consistent with our track record. Before reaching 8 times adjusted net debt on EBITDA, we have an investment capacity of 600 million euro available, which covers roughly 90% of the remaining investment target under Track 2027. By the end of 2027, we will go towards an operating margin of 90%, and that will be reachable by an average cost of debt that won't exceed 2.5% and a consistently high occupancy rate that won't go below 98%. For 2025, we reconfirm our 300 million investment volume, and that will be done through the 4 pillars: own developments, 200,000 square meters already in execution today, acquisitions both of standing investments and land acquisitions, partnerships with developers and landowners, as well as investments in battery energy systems and solar panels. Over the last 10 years, we were able to increase EPS by 9% on average per year, and for the upcoming years, we promise the market 6% growth per year of the EPS to a level of €5.60 by the end of 2027. Over the last 10 years, we were able to get a total accounting return of 19%, which is very strong. Over to you, Jo, for the update on ESG.
Thank you very much, Els. And also on ESG, the outlook can be confirmed. We were able to realize our first 2 battery projects in Flanders. One of them was opened by the president of Flanders, Mr. Uttendal, in Willebroek, and they are now fully operational. We want to realize 14 projects in Belgium and another 7 in the Netherlands for a total of 50 megawatts. The total program we want to do under track 27 is 100 megawatts. So 3 million has been realized, 8 million is in execution. And of course, 25 million of additional solar panels, leading to a total capacity of 135 megawatts by 2027. We continue to invest in heat pumps, where we have the target to have 50% of our buildings that would be heated by heat pumps by 2030. And of course, we want to have 100% LED lighting by 2030. And we continue to invest in EV charging on our sites. Ladies and gentlemen, this brings us to the end of the presentation. I would like to mention 3 points that really are very dear to us. First of all, we are very proud at Montea to be involved in 2 out of 5 largest single tenant projects in the Benelux, being Skechers and Intergamma. We are absolutely proud of the 99.9% occupancy rate, which is the highest in the gateway to Europe, the Benelux. And last but not least, let's not forget all the projects under development, 200,000 square meters today, GLA, are 100% fully pre-let. With these 3 figures, I think, ladies and gentlemen, that I can say that the results of Montea today are unmatched. Thank you very much. I hand over the floor to Ina for the Q&A session.
Thank you, Jo. We will now open the floor to your questions. If you would like to ask a question, you can do so by raising your hand or submitting your questions through the chat. I can see that the first in queue is Vivian Maquet from the Degroof Petercam. Vivian, please go ahead with your question.
I hope you can hear me.
We can.
Perfect. The system works as a charm. Thanks for the presentation. Thanks for the also increasing disclosure on the pipeline. This is very appreciated. If I may, I have 3 questions. First, coming back on the comments you made on the ERVs, and I would say the valuation, just to understand, we had a catch-up, as you mentioned, on like for like, as valuers were already including some of the inflation into the Q4, if I understood correctly. Does that mean that going forward, you will expect that the ERVs that they use in the valuation will follow inflation again, I would say suit, and that there will be no, I would say, some lower than inflation expected by then? That would be my first question.
I will take this one, Vivian. So on ERV, indeed, the catch-up has been particularly linked to the Netherlands. So in Q4, you have seen that our ERVs have increased by close to 2.5%. This is a result of the valuers taking into account the indexation for the Netherlands as of September. According to the commercial real estate regulations, we apply this indexation 4 months later. So effectively, we've passed it on to our tenants in January of this year. Hence, you have seen the first increase in the under rent from 10 to 12% between Q3 and Q4. And now we are coming down to 8% in Q1. Expectations going forward, it's fair to say that indexation will be the core driver. However, what we also see is some key locations continuing to perform strongly. Across the markets, broadly, the expectation is indeed indexation. However, several locations are also posting the ERV increases beyond indexation. And this is also something we have been seeing throughout the renegotiations process and some of the ongoing negotiations we have within our portfolio, that some locations continue to be very strongly demanded. That is, of course, linked to also a limited availability, constrained levels of vacancy in those markets.
Very clear, thanks. Then second one, I have a last one afterwards. Maybe just digging into the pipeline under exclusive negotiations. Any comment you can make on expected timing of these? I know I will not try to dig much more. I had another one, but I think that geographical breakdown will not be answered. But just so you know, like timing of this project, should we expect like next 12 months, or are the project that might take much longer to materialize?
Yes, thank you for that question. Well, obviously, I could repeat myself and say that we feel some traction, that there are more demand, that there is, again, where I would say a few months ago, we would have said for every site there is a candidate, but it just takes time to get it signed. Today we can say that on some of the sites, and especially in Holland, there are several candidates. That's all I can say. It's not concrete. I really hope that we can give you an update on that by August, but we see some traction in the market. And when I read the reports from my peers, I see that they have the same sentiment. So we feel that there is momentum in the market, but it's too soon to give some real confidence on that today.
All right. And the last one, I leave the floor to the others. On the project that are permitted but awaiting pre-let, I think that you had leads with some company for quite some time. I assume that there are still some of them wait and see. Are you looking to maybe open up the conversation to other parties for site that I assume that if demand is catching up, you might have a discrepancy in between people really looking and the other one just, I would say, maintaining discussion but not committing? Have you had any new leads, I would say, for projects that were maybe already in discussion with a specific tenant?
I didn't quite understand the question, Vivian. Sorry.
Just to understand if you have opened up, I would say, discussions with new parties on site that were maybe already kind of almost done with a defined tenant.
So to be very clear on those that are permitted but waiting for a tenant, there were no exclusivities signed till now. So when there are more candidates, we are open for discussion, and we feel that there is more traction today than, let's say, 6 months ago.
Clear, thank you.
Thank you, Vivian. Our next question comes from John Wong at Van Lanschot Kempen. John, please go ahead.
Good morning, can you hear me?
Yes.
Yes.
Okay, good that it works. Just to follow up on the reversionary potential, I'm just trying to understand how it jumps from 10% in Q3 to 12% in Q4, which was due to the indexation applied by appraisers, and now back to 8%. Does it mean that your indexation in the contracts was higher than the indexation applied by the appraisers, or is there another effect here?
John, the main point, so we've discussed the Netherlands in a lot of detail. The main point is also we have seen quite some strong indexation in other markets. So there has been, let's say, if I can give an example, in France, our indexation has been at close to 4.5%. So the Netherlands is a part of the puzzle, but there have been significant drivers across our portfolio as well.
So that basically means that there's also a timing effect on the other markets. Okay, clear. And then on the cost of debt, I think you mentioned that it's going to stay at 2.1% over 2025 and 26. Does this take into considerations any investments that yet to have to be sourced over this period?
It takes into account the 300 million for 25 and the 250 for next year.
Okay, clear. Thank you.
Thank you.
And just the last one on the renewal impact on like-for-like, there was 0.3 percentage points. How much higher rents were you exactly able to capture at renewal? If you could share that. Specifically
linked to the underlying on the indexation and the new rents signed?
Yeah, exactly.
That was around 3%.
Okay, thank you.
Thank you, John. We'll now move on to our questions from Frederic Renard at Kepler. Good morning, Frederic. Please go ahead.
Can you hear me?
Yes.
Hi. Hi, good morning, guys. Thank you for the presentation. A few questions in my hand, but just a bit more accounting. Some sorries if some people get bored along the way. Just on the lower cost of debt, so you mentioned that it was due to some forward IRS kicking in, but I guess you had this information before, so I'm just wondering why have you just communicated on it now?
All depends on the timing of the cash out, of course. That is difficult to assume upfront. So when the invoices will come for the new developments, that's always a little bit tricky. And yeah, as you know, we have had some changes in the development pipeline due to the delays in the pre-letting. So that's the reasoning behind it.
Okay. Understood. Then maybe can you remind me the Wertz deal, is it accounted for associate, as an associate in your account?
It's accounted for through the equity method, so
Yeah.
40%.
Okay. And then the question would be, do you think that your LTV IFRS is still relevant? Because the discrepancy between your LTV and EPRA LTV is now about 300 basis points. And obviously the debt that you take in that vehicle is not taken into account. So would you continue to boost your LTV, which looks optically low, but actually is a bit higher than what you mentioned?
The loan to value takes, of course, into account the IFRS figures, the consolidated figures. So for me, that is representative, taking in account the fact that in the EPRA LTV, the joint venture is in there, or the impact of the JV is double in the EPRA LTV. First of all, you have the funding of the participation and the shareholders' loan to the joint venture at the level of Montea, and next to that you have the debt at the level of the propco. So for me, the loan to value is more an appropriate way to manage or to manage the loan to value.
Okay, so does it mean that you could go your FRS LTV to like 38, 39, while your EPRA LTV is above 42, for instance?
The main target for us, or the main ratio that we keep into account, is the adjusted net debt on EBITDA, and we will make sure that it won't exceed or largely above the 8 times.
Okay, but your net debt does not take into account your leverage in the vehicle?
No, because it's the adjusted one.
Okay, but you could adjust the net debt to reflect the proportional consolidation method, to really have a sense of your underlying activity.
But it's in there, in the consolidated figure at Montea. Yeah, everything that has been paid to the propco or to Wertz for the shares is in there. It's incorporated in the IFRS consolidated figure, and therefore also in the loan to value figure.
Okay. And maybe a last one, sorry. I think some people would get bored along the way, but on the guidance, just taking into account the 9 cents you had on FBI impact, and now it's revised down to 8 cents. You mentioned that it was due to a lower number of weighted average number of shares. Can you? I can't recall why it would be the case, but maybe I missed something. If you can remind me.
We have adjusted the weighted number of shares to reflect that in the calculation, so the 8 cents is indeed the correct figure, and we will, assuming that we'll secure the FBI status for 2024, we will then pay out 80% of that 8 cents as a top-up dividend as well.
Okay, but nothing had changed since Q4, so it's basically just a change in the ratio that you did.
Correct.
Okay. Fully understand. Thank you very much. And sorry for the annoying question.
No problem at all.
No such thing as annoying questions. Thank you. Our next question comes from Steven Bouwmans at ABN AMRO. Steven, the floor is yours. Steven, I can see you might still be on mute.
Hello?
Now we can hear you.
Good. So, sorry for that. Thanks for taking my questions. You mentioned 174 million in exclusive negotiations today. What was that number by year end 24? And furthermore, I appreciate that you're positive on new interested parties, but did you also lose some interested parties year to date?
I think it's the first time we use this figure under negotiation, so I wouldn't be able to tell you what it was in December. But of course, this is a very active period. I would say April, May, June. These are 3 of the most active months, and that's why it's always a bit annoying when you have to give a picture and a bit of a feeling of where you are today. That's why we wanted to add this category to give some flavor on where we're going. So these are absolutely concrete deals. These are things where we have engagements, where we are exclusive at the table, and we have the feeling that we will be able to get them signed and announced over the next months. So that's a very important one. Now, on your second question being, are there dropouts? No, absolutely not. What we see is that there is traction, that there are more candidates, but we don't have deals that have ended due to the geopolitical turmoil that we've gone through over the last months. Absolutely not. I think it's also very important to mention, as Ina already said, the reletting of the buildings that vacated. We are now the 60,000 square meters was 50% renewing of existing leases, but was also 50% finding new tenants for buildings that vacated. So basically, good buildings on good locations, they are very resilient in this market.
Okay, clear. Then one last one, more technical question on capitalized interest development pipeline. So capitalized interest, I think it was up 17% year on year, and development projects on the balance sheet also up 21%, if I see that in your report at the end. How come, given the Weert Group joint venture is not in your development pipeline, right? So what has been included, what has been added to that development pipeline on the balance sheet so you can capitalize more interest?
It's correct that the GV is not in there, so there is no interest capitalization at the level of Montea for the GV. But what has been added? Tielmidden.
Because we, since the last quarter, we have now received a permit on an additional land plot in Tiel. So this is the third plot that we're now marketing and will be developing. Just as a reminder, we're developing Tiel North, we have Tiel Middle and Tiel South that are currently permitted and are in marketing. So this is the part that has moved between Q4 and Q1 into our active development pipeline.
Okay, clear. Thank you so much.
Thank you, Steven.
Thank you.
Our next question comes from Wim Levy at KBC Securities. Wim, the floor is yours.
Yes, hi. Thanks for taking my question. I hope you can hear me. Just some short follow-ons. On the comment you made on France, where you said leasing activity is weak. I'm wondering, did that have an impact on your development pipeline at all? I remember last year there was a small project that was pre-let for 12,000 square meters. Did that disappear? And just in general, was there any impact on other projects maybe?
I'm not sure the 12,000 one, that was an option we signed.
It was an option, but it was in our
confidential at the time.
Yeah. I think that one dropped, huh?
Yeah.
But it already dropped, I think, last year.
Yeah.
Yes.
It's already dropped last year. It's not new. This was already in the Q4 figures. Basically, what we see, Wim, in France is that we are, of course, it takes time for your land bank to get all the permits in place. It takes time in Belgium and Holland, but in France, it takes just a little bit longer. What we see now is that we are getting our first permits in the upcoming months, And we see that there is traction both on light industrial as on the logistic developments.
Okay, right. That's in the land plots that you
Yeah.
the Toury and Senlis. Okay, fine. Then just a very short follow on, and I know it's marginal, but I believe, if I'm correct, that the FBI uplift diminished from 9 cents to 8 cents in your EPS outlook for this year. Just generally, I mean, I see the sentiment in the Dutch government is not really favoring real estate companies in general. Did anything change, and how do you feel about the current, let's say, investment sentiment in the Netherlands?
On the investment sentiment, I will leave it up to Jo and Ina. But what I can say is the abolishment of the REIT regime, or the application for the fact that it's no longer applicable for Montea to apply for the Dutch REIT regime, is not for now penalizing our results, because if we look at the Dutch figures for now, we have an effective tax rate in the Netherlands of around 4% currently. And you remember well that the dividend taxes that we had to pay in the Netherlands were at 5%. So the fact that we get the subsidies for new and green developments is helping to lower our effective tax rate in the Netherlands.
Okay, and that is sustainable as long as you keep up those investments?
And depending, of course, on indeed how the government will incentivize green or sustainable investments indeed.
And on the investment market, Wim, of course, the permitting remains difficult in Holland. We told you, I think it was a half year ago in our results, that Holland had become from the most liberal to the most stringent country in Europe on permitting, and the nitrogen discussion, the power supply, the power congestion issue remains. But that means that on the investment market, the value of new product, when you're able to get the permits in place, the value is there. And we see, as Zina already mentioned, we see transactions at yields below 5%. So there's absolutely no stress on the investment market in none of our countries.
All right. Thanks a lot.
Thank you.
Thank you, Wim. We have one question coming in through chat from Shital Jaimalani from Deutsche Bank. And it's a question around the 12% reversal potential that we had in Q4 versus the 4% rental uplifts that we secured in Q1 2025, and whether this discrepancy is linked to the property location or quality impact. The main reason behind that is, Shital, we have a very diverse type of portfolio with long-term leases. In some cases, when the leases come to a break, the only option is with the tenant to basically leave or notify us that they are willing to terminate the lease agreement. Otherwise, the break is not exercised and we continue receiving indexation on that front. There is also a real granularity in the portfolio with some assets that have been already rented and have caught up in line with the ERV evolution. And there are other assets, and I'm specifically talking about our assets in Germany, and we have quite a significant under rent in the Netherlands, which are really driving the 8% part. So it's a real mix of how we are renegotiating, and effectively I think the core message that's important to mention is that we have, where we were at ERVs, we were able to continue on those levels without any concern. And the contracts where we were below ERVs, we were able to bring them up to ERV levels. So it's a mix that will continue evolving every quarter. We have an additional question in the live queue from Kanat Mitra at Barclays. Kanat, good morning, please go ahead. Kenneth, I think you're still on mute. We can hear you now because I think you have unmuted yourself, or we can try to hear you. If that doesn't work, then please feel free to send us your question and we will pick it up after the webcast. We don't have any remaining questions in the queue anymore, so Jo, back to you for the concluding remarks.
Okay, thank you, Ina, and thank you, ladies and gentlemen, for your time and your inspiring questions this morning. I'd like also to thank Els and Ina for their support and their clear answers. It's always a pleasure to do this kind of updates with you. We look forward to continuing on this path of growth, and we are confident that the future for Montea looks bright, a bit like the weather. So have a good weekend. Thank you very much for your time, and talk to you soon.